Hey guys, this is Mitch Trades with the Eldorado Trade Group, and today we are going to be doing the 12th class in our series, Everything You Need to Know to Trade Stock Options, where today we are going to cover one risk management strategy that I came up with. And this is also very subjective, so you could come up with your own, but I'm just going to kind of read through this and walk you through the psychology behind this. So obviously, you see the account size, you see the max position size, which is 20% of your account. That's essentially the max size that you should take on any given trade. This is your max loss on your max position size, which let's say it's 10% of your 20% of your account, obviously is as follows. The next section is max daily loss, or your sign to sign off. Dependent on your account size, if you see this number, if you're down this much money, probably should get off. Next one is max number of trades per day. As you'll notice, it's 4 for all of them. It applies to every account size. The next one is ideal number of trades per day, and this also applies to every account size, and the number is 2. If you can get away with taking 2 trades in a day, and they're winning trades, beyond that, you should really walk away. And lastly, we have the max take profit percentage on max position sizes. So let's say you put down 20% of your account on a trade. Where you should expect to take profit is somewhere in this area, dependent on your account size. So here's a few trading rules that we wrote out here. Assuming that there will only be 4 trades max taken in one day, if your first trade of the day is a win, you will take a second trade. If the second trade of the day is a win, I recommend either signing off or taking the third trade, which is a gamble. If the third trade of the day is a win, I highly recommend signing off or taking the fourth and final trade of the day, which is most definitely a gamble. Probably shouldn't have even gotten to this point. If your third trade is a loss, sign off. You always want to leave a little bit of money in your account in case breaking news comes out or some other factor that may lead you to trade later in the day than you normally would. If the first trade of your day is a loss and the second trade of the day is a win, I recommend taking a third trade and signing off after, no matter what the outcome is. If the first trade of your day is a loss and the second trade of your day is a loss, sign off and try again fresh the following day. Using this risk management strategy, in theory, in a $5,000 account, the max daily risk or loss is 4% of your account, or $200, while the potential profit is somewhere between 6 and 12%, let's say if everything goes right, which is $300 to $600. This is using a 10% stop loss and 15% as your take profit target, keeping in mind that usually it is smart to take profit before you see 15%. A good profit target is 5 to 15%. You're not always going to take profit at 15%. It's not always smart to wait that long necessarily, depending on your plan. If you see it going that far, then sure. But if it's not a part of your plan, I wouldn't wait for 15%. I would probably take profit somewhere between 5 and 10. These are the rules of the strategy. 1, never lose more than your max daily loss in a day. If you reach this point, depending on your account size, you can apply this to any number, you need to walk away. 2, always set a 10% max stop loss for every trade. And this might mean, hey, it rebounds at 12% and you lost out on the trade because you set your stop loss, but in most cases, and it's just not a good situation to sit in. 3, never take more than 4 trades in the morning. 4, if your first 2 trades are wins, sign off. 4, if your first 2 trades are wins, sign off. If your first 2 trades are losses, sign off. That's a pretty good rule of thumb to have. 5, make sure every trade has a thought-out plan. Do not gamble. Self-explanatory. 6, journal all trades and results. If it's worth taking a trade on and risking money on, it's worth writing it down. That way you can track your progress or lack thereof and determine where you're having problems. So let's say you have a $5,000 account. These are all the scenarios that could potentially happen. Let's say depending on the amount of trades you take, this is your max money risked, and this is your potential profit in each scenario using this strategy. I would try to avoid scenario 1 and 2 because that's really gambling. Anything beyond, if you have 2 good trades in a day, you really should walk away. So this is where we're going to focus, is 3 through 9. And if you look at this, this is kind of the sequence that you would want to follow depending on what happens to you in the morning. For example, if you take a winning trade and then you take a losing trade, go for it one more. If it's a winning, sign off regardless. If you take a winning trade and you take a losing trade and the next one is losing, same deal, you're going to sign off. If you take 2 losing trades in a row, you're going to sign off. And you can see here why. So that's pretty much my own personal risk management strategy I came up with. You can definitely come up with your own. This is just one that I personally just kind of sat down and wrote out. Depending on your trading style would probably change some of these factors for you personally. But you can play around with this. This is kind of a good place to start. Thanks for checking out the 12th class in our series, Everything You Need to Know to Trade Stock Options. Once again, this was Mitt's Trades. Have a good night.